Hello and good day. I hope you're doing great. I'm here with you for the daily gold analysis on February 4th. All right, we're on the daily time frame. Looking closely at the chart here, we can clearly see that last week, specifically on Thursday, immediately after Mr. Trump announced his new nominee for the Federal Reserve, the market price of gold began to pull back significantly from its previous all-time high. Now, considering that the asset had just experienced such a remarkably strong and impulsive rally leading up to this point, it is not surprising that the subsequent downward move we witnessed was also quite powerful and intense. The price entered the area of the daily Fibonacci lines, and after reacting to the BPR present at the $4,400 price level, it bounced from this area and has been in an upward trend again over the past 2 days. This significant and rapid downward price movement in gold has not managed to disrupt or invalidate its long-term upward trend, and there was absolutely no fundamental change in its overall character or any significant alteration in the underlying technical structure. Now, if we take a closer look at the 4-hour time frame, we can clearly see that the gold price reacted very strongly to its established upward trend line, and then immediately started its steady upward movement once again. We also need to keep in mind that all the factors that led to such a rise in the price of gold, including geopolitical tensions, are still present. Consequently, we can still reasonably expect the market price of gold to continue to rise steadily throughout the coming days. One of the most influential factors currently affecting the price of gold is the ongoing tension between Iran and the United States. If, in the coming days, significant and meaningful progress is successfully made in the negotiation sessions, we can reasonably expect the price of gold to experience a notable and steady decrease. However, if geopolitical tensions continue to escalate further and the likelihood of war increases, we can expect the price of gold, acting as a traditional safe haven asset, to climb back to reach its previous historical peak or even potentially higher levels. Looking closely at the 1-hour time frame, we can clearly observe the steady upward trend that gold is currently experiencing, which is moving upward at a relatively reasonable and sustainable slope for investors. The recent significant downward movement in market price that has occurred can be accurately interpreted and considered as a healthy correction, a strategic liquidity grab for major players, and a solid setup for a substantial and fundamental increase in the overall price action. As we can see, after the structural change that occurred in this area, lower highs and lower lows were formed. And finally, with the start of this week, when the lowest level in the past 2 months was recorded, this upward movement began. After surpassing the $4,250 level, we saw a structural change to the upside, and with the formation of a new peak, this bullish structure was confirmed once again. In the multi-ICT indicator as well, we can see that the price has managed to reach the high potential zone, so moving forward we expect that after a price correction, it will return to this area again. As a buy setup, after the FTG liquidity is collected or the liquidity present at the 4,885 level is swept and the price returns above this area, we can enter a buy trade targeting higher levels, such as an R to R ratio of 1.1, 1.2, or even the FTG at 5,265. Wishing you success and profitable trades.